Good afternoon, everyone. We're just giving it some time so everyone can join the webinar. Good afternoon. We're just giving it some time for people to come into the webinar, and then we'll start in about another minute. Okay, so let's begin while people are coming into the webinar. I'm Anthony Ford-Jones. I'm the Director of Business Development for the HIA-LI. I want to welcome everyone into our webinar presentation of the next round of PPP funding for businesses discussion. Ariana, if you just want to go to the next slide. Before we start, I want to thank, and we have a couple in attendance today, our board of directors who have been very supportive of the HIA-LI through this whole COVID cycle we've been in. So I want to thank each one for their support of our organization. And before we begin, I just want to let you know of a few upcoming events, programs. Tomorrow, Suffolk County and us are having a vaccine update. They're going to be giving some information regarding the current status of the vaccine, the COVID vaccine. Steve Ballone will be on making comments. January 22nd, we have our annual meeting legislative program. We're going to have both Kathy Hochul, the Lieutenant Governor of New York, Laura Curran, Nassau County Executive, and Steve Ballone, Suffolk County Executive, all making comments, and it'd be very interesting to see and hear what they have to say, given the new administration in Washington and also where we are on a COVID standpoint here on Long Island. And the last thing is we do have a CEO forum coming up on February 4th, featuring our Central Business System member. So let's begin. I want to welcome everyone again to the webinar. As you all know, this is a very important subject for many businesses. Seems like we were just having this webinar last April, so we're repeating it now. But let me introduce a couple of people which we're going to move on to. We have Robert Pecota, who's the SBA branch manager of Long Island, and Bernie Reiber, who's the director of Stony Brook Small Business Center. So I guess what we want to find out today is exactly what do we know? And I know you're not going to be able to answer all the questions, but what do we know is being offered today? Who qualifies, the process? And anyone who has questions, please put it in the Q&A field, and I'll be asking those questions as we get to the end. So I'm going to turn it over to you, Robert, and let you lead.
Thank you, Anthony, and welcome everybody. You're in for hopefully some good information today. You know, we're at another epic moment in our history, business-wise, and a lot of things are changing. So kudos to all of you for making time out of your busy day to join us, because it definitely is worth at least listening in on what's happening so far. There's a lot of information we don't know exactly just yet, but in light of the recent legislation, in large part, thanks to some of the hard work by your elected officials, the stimulus package and programs for disaster relief, pardon the phone, it's ringing off the hook. A lot of things have been modified and improved upon. So I think some of the information that Bernie and myself may share with you will be useful. I don't normally do this. I'm going to read something for you because I don't want to miss any information. But this is a press release that recently came out that sort of sets the tone for how the new version of the PPP program is. Many of you have EIDLs already, or you may have applied for PPP in the past, but this gives you some kind of flavor for the process moving forward and why things are not immediately available. So this came out of Washington. The SBA, in consultation with U.S. Treasury, reopened the Paycheck Protection Program loan portal to PPP eligible lenders with $1 billion or less in assets for first and second draw applications this past Friday. SBA granted dedicated PPP access to community financial institutions, which include CDFIs or community development financial institutions, minority depository institutions, certified development companies or CDCs, and microloan intermediaries as part of the agency's ongoing efforts to reach underserved and minority small businesses. So I'll stop there, but just again, my point is this program has been phased in, this new round, to make sure that the smaller businesses are being helped first. That might have been sort of a process that we learned from our journey earlier with the first program, and that smaller institutions have an opportunity to help the small borrowers in their worlds. CDFIs, CDCs, those are all institutions that generally help smaller entities. If you already have a PPP, the next wave of borrowing is going to be early next week. So again, you have until March 31st, as it is right now, that you must take your PPP, your new second draw of PPP. And Bernie's going to get into the verbiage a little bit momentarily, but I do want to make a strong case here for the very point that you're here because you want to know more information. And Bernie represents the Small Business Development Center at Stony Brook, and the SBDCs are our resource partners of the SBA. That's where you get technical assistance on this kind of stuff. I'm not saying you can't get great information from your accountants and your attorneys, but as things develop, as new processes and procedures come out, you want to establish a relationship with your Small Business Development Center, which can be reached virtually now. None of them are operating out of their offices. You want to go online and just look them up by Google or Anthony, or I can share those contacts with you, as well as SCORE, Service Corps Retired Executives, which operate out of Hauppauge, as well as virtually in New York City and across the country. There are folks that are standing by to help you. What do you need? What documents in what order? That can all be made easier for you and reduce a lot of the angst you might be experiencing. But the good news is, if you look at this legislation, Bernie's going to cover some of it. I'll answer some questions about it. The good news is more types of entities now have access to the PPP. The forgiveness process in many areas will be easier. Some organizations that were not covered at all in the first wave now have opportunity to get support. So I'll stop there. I'll turn it back over to Anthony for a redirect to Bernie. Thanks.
I have to unmute myself. Thank you, Robert. So let me introduce Bernie River. Bernie is the director of Stony Brook's Small Business District Center. And Bernie has some thoughts. We were chatting before everyone started, but I'll turn it over to Bernie and let you take it, Bernie.
Okay, well, thanks, Rob, and good afternoon, Anthony, and good afternoon, everyone. Would like to mention right up front here, very occasionally from time to time, for whatever reason, I do have connectivity problems. So if I do, and bear with me on that, but otherwise, I look forward to providing you with a detailed overview. That will take about 15 to 20 minutes or so. And then as Rob, Anthony had mentioned, we'll be opening it up to questions. This Consolidated Appropriations Act that was just passed by the federal government is about $900 billion in federal stimulus. It includes three large buckets of money, including $120 billion bucket for supplemental unemployment insurance, which will carry us through March 14th, $166 billion bucket of money for direct payments. These are the $600 for individuals, $1,200 for couples, and so on and so forth. And the third large bucket is the $325 billion bucket for small business. In that $325 billion bucket, we have $284 billion for the Payroll Protection Program, another $20 billion for the Economic Injury Disaster Loan Grant Program, $15 billion in grants for shuttered venue operations, which is new, and $3.5 billion in extended SBA debt relief payments. Taken all together, this program is the second largest federal stimulus package in the country's history. That said, there are initial indications that a third stimulus program will be one of the first objectives of the Biden administration, which is expected to be larger than the just passed stimulus. So I'm going to focus on the Payroll Protection Program. Applications can be submitted through March 31st, 2021. And indeed, as Rob had mentioned, applications started to be accepted this Monday by community development financial institutions from first-time applicants. And then applications for second draw loans, or what I'm going to characterize as PPP2, began being accepted by community development financial institutions just yesterday. And then this morning, I learned from the SBA that applications for PPP funds will be opened up from lenders which have up to $1 billion in assets beginning tomorrow. And then Tuesday, everyone else will be opened up as far as being able to accept applications for the PPP2 program. The application form for first-time borrowers, for those who have that applied before, is almost identical to the previous version of the form. The second draw loan application is similar, with an added section for something called gross receipts information, and I'll be covering that in the coming minutes. As I had mentioned to Anthony before we went live, so to speak, this guidance is current, obviously, as of today, subject to change based upon further SBA guidance. And if you remember, when we went through the process in April and May, there was subsequent guidance that was forthcoming in one point of time, almost on a daily basis, because of the complexity of these programs and the need to provide drill down in order to obtain additional information in order to do what the Act is looking for the applicants and for the lenders to do. So let's go through what the first draw of a PPP loan would entail for this new program in 2021. And that's to say, for entities that did not receive a previous PPP loan and are going to receive their first PPP loan under this program. What's the eligibility? The eligibility is any business or 501c3 not-for-profit organization that has no more than 500 employees. It would also include sole proprietors, independent contractors, and self-employment individuals. New categories have been added with the current Act. This would include 501c6 not-for-profits, including the HIA, chambers of commerce, organizations with 300 or fewer employees. In addition, it would also add destination marketing organizations, and it would also add local newspapers, TVs, and radio stations. For this time around, ineligible entities would include businesses that were not in operation on February 15th, 2020, since The original act, and this act was designed for entities in operation prior to the COVID-19 pandemic. Other entities that are not included, not eligible for these funds, include publicly traded businesses and entities in bankruptcy. Now, the amount of the loan for these new first draw borrowers, again, it will be up to $10 million. First draw loans for borrowers with employees are going to be calculated again as 2.5 times average monthly payroll cost. And the average monthly payroll costs can be based on calendar 2019 or calendar 2020 or the 12-month period prior to loan application. Similar to the initial program, the average monthly payroll would have to be adjusted for items such as compensation paid to an employee in excess of $100,000 on an annualized basis. Payroll, again, would include gross wages, employer contributions to employee health insurance, but now has been expanded to include premiums for vision, dental insurance, life insurance, disability insurance. So they've expanded the definition. If we have self-employed borrowers, okay, they're going to be looking at, again, the Schedule C on Form 1040. And if they're applying for a first draw, we'll be able to borrow 2.5 times their average monthly net profit based upon, if you look at the details of the Schedule C, line 31 of their 2019 or 2020 Schedule C, if they've in fact already filed the 2020 Schedule C. Again, net profit for this calculation, similar to the first program, is capped at $100,000. So that's for first draw. For second draw, what I call PPP2, for entities that have previously received an initial PPP award, okay? These loans are going to be available to entities with a 25% reduction in gross receipts from 2020 as compared to 2019. I'll get more of a definition in that in the next minute or two. But what's the eligibility? The eligibility would be for entities that were in operation, again, by February 15th, 2020, received a first draw previously, but now these entities can no longer have as many as 500 employees. It would be 300 employees or less based upon all full-time or part-time employees. The 25% reduction in gross revenue would be between comparable quarters in 2019 and 2020, okay? And another qualification is that the applicant has used or will use all first draw PPP funds on eligible expenses on or before the expected date of the second draw loan disbursement. So the SBA is going to require lenders to delay funding for the second draw, if they're approved, until the borrower has fully used all of the first draw funds. It's important to remember that it would not be, is not a requirement that forgiveness of the first loan, the first PPP loan, has either been applied or been received, okay? So you can certainly apply and receive a second draw without putting in for forgiveness. The important thing to remember is that all the monies from the first PPP draw have to be used up. You can't use half of the first draw and then apply for the second one. You'll be precluded from receiving money for the second draw. Now, the amount of the loan for the second draw is different than the amount of loan for the first draw. Okay, that is that it can be up to $2 million. Remember that the first draw was up to $10 million. Again, this would be for employers, and it's calculated as 2.5 times average monthly payroll costs. However, it's been expanded as far as the multiplier here, because borrowers with a NACE code that begins with the number 72, which would include hotels and restaurants, would be eligible for loans up to 3.5 times average monthly payroll costs. Again, up to the cap of $2 million. So the borrower can choose to calculate average monthly payroll costs based upon 2019, 2020, or the 12-month period prior to when the loan is made. Okay. Different than the first draw, PPP, borrowers cannot include a refinancing of an Eidl loan, that's economic injury disaster loan, in a second draw application. Again, self-employed borrowers, those who file the Schedule C, will also be able to borrow 2.5 times the average monthly net profit, again, capped at $100,000. Now, how would you calculate the decline in gross receipts? For borrowers in operation for all 4 quarters in 2019, you'd compare gross receipts during the first, second, third, or fourth quarter in 2020 to the same quarter in 2019 to determine if there was a 25% or greater revenue reduction. The SBA indicates that only calendar quarters are to be used for this calculation. So you can't make up a quarter, say from the mid-March through mid-June. It has to be a calendar quarter as you go through this process. First draw PPP loans and Eidl loans advances are going to be excluded from the gross receipts test, but as you can imagine, sales of products and services would be included in gross receipts, rents would be included, fees and commissions would be included, and those gross amounts would be reduced by returns and allowances. The documentation requirements for the gross receipts test for loans greater than $150,000 for this PPP2 approach, documentation of revenue reduction is necessary at the time of loan application. For loans of $150,000 or less, documentation will not be required with the loan application. However, it will be required with the loan forgiveness application. This new act provides for a modification of the amount of a first draw. For example, if you received the first draw during the April through August time period of last year, now we have different criteria in this new act. And if a borrower received their first draw loan last year, then the loan amount for the first draw can be increased if changes in guidance result in an increased original loan amount. As of now, the SBA hasn't provided us, as far as I know, with the process for these increases, and it's going to be forthcoming in the coming week or so. Similar to the first act, you need to certify on the application the economic necessity. Okay, this is a certification that you sign off on, both for first and second draw. The applicant is required to certify that the current economic uncertainty makes this loan request necessary in order to support the ongoing operations of the applicant. Now, let me bring to your attention the aspect of forgiveness of either a first or second draw PPP loan. Borrowers can qualify for forgiveness of PPP loans up to the full principal amount of the loan if the loan proceeds are used for forgivable purposes during the borrower's covered period and employee and compensation levels are maintained. Okay. Additionally, and similar to the change that was made during the middle of the first act, at least 60% of the PPP loan proceeds are required to be used for payroll costs to achieve full forgiveness of the loan. The costs eligible for forgiveness include, as before, payroll costs, mortgage interest for a mortgage that was entered into before February 15th, 2020, rent on leases for leases that were entered into before February 15th, 2020, utilities for services, and 4 additional categories, which now include covered operation expenditures, covered property damage costs, covered supplier costs, and covered worker protection expenditures. Let me just say that in general, a reduction in the number of employees or the rate of pay will affect the forgiveness of the loan. For example, if a borrower decreases salaries or wages by more than 25% for any employee who made less than $100,000, loan forgiveness in general will be reduced. Secondly, if the number of full-time employees decreases, loan forgiveness will be reduced. The covered period for the first and second draw under the new act begins on the date that the loan proceeds are dispersed to the applicant and ends on any date the borrower chooses, that is between 8 and 24 weeks after the covered period begins. So you can choose as little as an 8-week period, covered period, as much as a 24-week covered period, or anything in between. There's going to be simplified forgiveness under the provisions of this act for loans of $150,000 or less for both first draw and second draw loans. Previously, the SBA had provided for a simplified process to streamline this for loans of $50,000 or less. This has now been increased to $150,000. Okay, as of January 10th, again, the SBA has not provided the forms for this new simplified forgiveness. This act also had an impact on the economic injury disaster loan advances on PPP forgiveness. These economic injury disaster loan advances were up to $10,000 as they were introduced last August. Okay, and as a criteria for PPP forgiveness, they were brought in to the calculation for PPP forgiveness, and so they were recharacterized not as grants at that point in time, but as $10,000 loans subject to be repaid. That has been done away with this particular act. This act eliminates the requirement that Eidl advances be subtracted from PPP loan forgiveness. Important to let everybody know here that anyone who has put in for forgiveness previously and was caught up in this Eidl advance up to $10,000 now being recharacterized as a loan, that previous calculations will now be set aside and Eidl advance amounts previously deducted from a borrower's forgiveness will now be remitted to the lender along with any interest that was paid. The act also dealt with the tax deductibility of PPP. Expenses now paid with a PPP loan are deductible. Incredible. that they've opened this up to full deductibility. This was something that it was thought that, you're double dipping, so to speak, but now this is being permitted in order to provide a further incentive to the companies that have been caught up in these businesses that have suffered so greatly during the pandemic. As far as the new categories of eligible costs for PPP forgiveness, I mentioned that there were additional categories that you could use these monies for. They would include covered operation expenditures, payments for any business software that would facilitate business operations, the processing of or tracking of payroll expenses, something that's being used for human resources. So payments for any business software. Secondly, covered supplier costs that are essential to the operation of the applicant. And third, covered worker protection expenditures, operations of providing for supplies or capital expenditures associated with purchasing equipment or installation of whatever in your place of work in order to provide for protections for your workers to guard against PPP infections. That's what I wanted to cover as far as how the new act dealt with the PPP program. I also want to bring to your attention briefly the Economic Injury Disaster Loan Grant Program, acronym is Eidl, and then finally wrap this up with the extended SBA debt relief payments. As I had mentioned up front, the grant program, which was first initiated last April and May under the initial act, was funded for $20 billion. That's been renewed for another $20 billion. It proved to be very popular. It relatively quickly ran out of money. So the criteria again is that the $10,000 advances, up to $10,000 advances, will not have to be repaid. However, the eligibility is going to be for companies now within low income communities who saw a 30% reduction in business during any 8-week period between March 2nd of last year and December 31st, 2020. And these companies have to have less than 300 employees. What's a low income community? A population census tract where the poverty rate is at least 20%. So if previously a company put in for hope to get a $10,000 Eidl advance, received a $1,000 Eidl advance, they now qualify for an additional $9,000 advance. That's what they can claim in order to obtain a total of $10,000. Or if they haven't claimed it before, they can make an initial application for $10,000. Different than the first act, where the SBA felt that they could get these advances out in 3 days and found out that that was a near impossibility. Rob, they've changed that criteria, that time frame, to 21 days to give the SBA more time to process these applications. The last thing I'd like to mention, that the extended SBA debt relief payments. This was present in the first act as well. This bucket of money is $3.5 billion. This will provide debt relief payments of principal and interest on existing loans that companies have that are guaranteed by the SBA. This would include 7As, the 504 loans, and the microloan programs. So they will provide the SBA 3 months payments for principal and interest starting in February of 2021. So I'd like to wrap up this portion of the program by saying that During the first program, we advised hundreds of clients, both old and new, through both the PPP program and the Economic Injury Disaster Loan Program. As a center, we achieved over $35 million of economic impact through these programs, meaning monies that were afforded to clients that came through our Stony Brook SBDC offices. We saved over 1,500 jobs through these efforts during the previous program. We have 9 focused advisors that are standing by. We look forward to providing similar service over the next 2.5 months. And for anyone that would like to make an appointment on behalf of their company, please go to the Stony Brook SBDC website at www.stonybrook.edu/SBDC. That's what I have. Anthony?
That's great. That was wonderful. That was very comprehensive overview of everything. We do have some questions. Before I go to that, I want to just point out, I know Robert sent me this morning something that was put out by Newsday from James Matterhorn that the New York State will not forgive PPP loans. And that apparently came from the state's tax department. So I just wanted to mention that to everyone. So let's take a look.
That's great news.
Yeah, so that is good news. Let's see some of the questions we have. We have, how is a non-for-profit supposed to calculate the 25% loss of revenue for a quarter?
Well, again, the not-for-profit will have to come up with their gross receipts on a annual basis for 2019 to 2020, and any particular quarter that is compared from 2019 back to 2020 back to 2019 that has less than 25%, then would be eligible for PPP2. Keep in mind that if not-for-profits had not previously made an application for the PPP program, that the first go-round, including the first go-round associated with this act, does not have the gross receipts test. It's only for the second round, PPP2, under the current act, that has the gross receipts test. Also, if you have a comparison of 2019, 2018 by quarter, the reduction of 25% can be limited to only one particular quarter. So if 3 quarters, your revenue was basically the same, your receipts, but in 1 quarter, it was 25% less, then you qualify as far as the gross receipts test. And the last thing I'd like to mention is that, the $150,000 cap here, as far as the documentation that needs to be provided for the applicant. Okay, if it's over 150,000, then you have to submit this analysis at the time of application. If it's under $150,000, then you have to be aware that you've gone through the calculation, but you don't have to address it until you come through with the forgiveness.
Okay, great. Next question, which I think I already answered, is how will the PPP money awarded and forgiven in the first round be taxed? So I guess it will not be taxed.
It is not taxed.
Okay.
Not only is it not taxed, but you can still deduct the standard deductions too. So it's actually a better deal. So.
Okay.
And also, I just want to point out, there's right now as it stands, when you're comparing quarters, as Bernie so eloquently stated, when you're showing the reduction in gross receipts, you got to stick with quarter by, I think Bernie mentioned this, but I think it bears mentioning again. you got to stay with the same quarter. You can't just pick 3 months compared to any 3 months. It's got to be Q4 versus Q4, et cetera.
Exactly. In order to elaborate on that, you can't use Q4 in 2020 and compare it to Q1 in 2019.
Okay. How will it be established as to whether or not the funds have been used?
Rob,
Do you have any insight into that?
Well, I mean, bottom line, if you were approved for, $100,000 and you only chose to use a portion of that, then it, by definition, it's not fully used. If you were, they want you to use up your first draw first. And only then can you go for a second draw. They're trying to make this money help as many people as possible. So it goes without saying that you must demonstrate that you used what was made available to you.
Clearly, if you put in for forgiveness and you were approved for forgiveness, that would be indicative that you used up all your first draw money. Or if you've applied for it and you're waiting for approval for forgiveness, that would indicate that you've used up all your first draw money. Other than that, if you haven't put in for forgiveness and you have used up all the money, I would imagine, and what I had recommended back in April, is that you establish a dedicated account to put your PPP money in, okay? Then you go to the lender and you provide the documentation which demonstrates that you received $150,000 of PPP money, and this is what it's been used for based upon that documentation.
That's an excellent point, Bernie, because obviously you can't just keep it in an account someplace and then ask for more money. You must show, whether it be on some kind of invoice, canceled checks, or any kind of bank statement clearly showing. And I do remember when Bernie put this out initially, by setting up that dedicated account, it makes things very easy for you and your accountant. But however you choose to, you got to account for each dollar.
Okay. And now, Robert, I see you indicated you wanted to answer this one live. As a wedding vendor, would I be eligible for the 3.5 times average monthly payroll?
Yeah, right now, again, in the chat, there is a webinar opportunity. You can sign up for this. And by the way, space available. If by chance you cannot get on, recordings will be made available that addresses very issue. But right now, as the documentation shows, the person who entered that question, they would probably not qualify as the venue operator we're talking about. They would probably not qualify. So I don't know if that answered the question or not, but does that make sense?
It makes sense to me. If it doesn't answer the question, then please email us and we can get back to you.
And I would definitely contact me. And again, with a lot of these things, some clarity will be forthcoming. So this is really our first pass, and by statute, the SBA has rolled out the information in a very rapid time period, but more information will come out, sort of addressing some of these nuances.
You know, the NACE code for this is 72, which is focused on hotels and restaurants. Within the NACE code 72 are quite a number of subcategories, which refine what the definition is. Okay, so possibly the business that was just mentioned might be in one of those subcategories, but that would be the way you would eventually more or less identify whether this particular business would be qualify for 3.5 times payroll versus the 2.5 times.
Okay. Next question is, can we use the same info from 2019 that we used for the first draw application made in 2020 on this round 2 application?
Absolutely. And that makes it easy because go to the same bank they have the information, and you say you want to go for the second draw.
Okay.
That's the easiest way to do it.
Anthony, if I could just take a moment, and a really great comment just came up, you know, when you're filing, and we were talking about the NAICS code of 72, as Bernie mentioned, that food service, hospitality, et cetera. You can't at this point change your NAICS code. So you pretty much have to be consistent. So there might be some folks that if they're on the border, well, I'm kind of 72, so therefore, you know, when I apply, I'll list that as my new NAICS code. It's got to be what you were, especially prior to February 15th, 2020.
Okay. Next question is, can ER 401k contributions be used in the calculation of gross wages and health insurance costs?
Retirement plan contributions can be included in that. So if they are contributions from the employer, yes.
Okay, good. Here's another question. I had to pay back the EIDL grant, which was $10,000, which wasn't forgiven, which I originally was told was a grant that was free money. My forgiveness was reduced by the amount, and I just cut a check back to the bank for the EIDL grant. So I don't know if that's a question or just a statement.
Well, it's a statement, and the good news is that this act recognizes that looking back at the initial act, if they had it to do all over again, they would have not have addressed the $10,000 grant that way, which was originally identified as a grant, an award that would not have to be paid back. But, you know, if you went through the payroll protection program forgiveness calculation, then you found out that, well, you know, the $10,000 was not free. Now we find out because of this act that they're going to correct that. That, you know, if you pay back the $10,000, that the act addresses that, and that your lender will be getting in touch with you as far as making you whole once again for what the original act intended it to do, and that is to stick the concept from beginning to end that the $10,000 would be free money for you to keep, period, rather than being caught up in this payroll protection program forgiveness calculation.
Okay.
If I can just add, that's a really important point. Bernie covered it perfectly. But I've got a lot of phone calls about this. Two things happen to you if you took an advance with the EIDL. And again, I'm not making an excuse here, but the magnitude of number of applications, just it's mind-boggling, but it's understandable how things happen. So if you got an advance and then you went for a PPP, what your lender did was one of two things, or they're going to do one of two things. One is they took that advance amount out of your PPP account. So some people woke up and said, wow, I've got $1,000 less. I wonder what happened to it. Well, the lenders recognized that, you know what, that was going to be taken away from your PPP disbursement, or they deducted it from your forgiveness amount. So either way, you got less than you thought you would net. And again, the SBA will make the calculations for, as Bernie mentioned earlier, so they will make it right. They're going to go back to the old applications. So it's truly good news. But bear in mind, there's been north of 5 million applications for EIDL. So I can't comment on the speed of this happening nor the process, but the point is they know they're working on it, and that's good news for all.
Okay. And we have like 10 minutes and we have a bunch of questions. So let me see if I can get to most of these. How do you apply for balance of EIDL advance?
First of all, there's the eligibility. You had to be, because they've tightened this up compared to the original act in the EIDL. Companies now have to be within low income communities, and those companies have to experience a 30% reduction in business during any 8-week period between March 2nd and December 31st, 2020. The definition of low-income community now, a population census tract where the poverty rate is at least 20%. I don't have any information on which communities would fall into that definition. Rob, I don't know if you know anything about that. Maybe that's forthcoming. Certainly on Long Island, not every community is going to fall within that definition. And if your business is not located in that community, then you at this point in time, according to what provisions of what I'm aware of, that company, if it's outside of that particular community, will not be able to put in an application for an Eidl advance. Rob, can you add to that?
Yeah, a couple of comments. I'm not really sure exactly what the question is addressing. I interpret it differently. If you were approved for an EIDL for, let's say, $100,000, but you chose to take only $50,000 because you really didn't think you needed it, you'll weather the storm, so to speak, that was certainly your option. You didn't have to take the full amount, but you were authorized. The SBA told you you're good for 100,000. So if that's the case, if that's the question, you may go and ask for in a reconsideration process. You have your original email from the SBA, or you can address it to PDC, Papa Delta Charlie, .reconsideration, the word. So I'll say it again, P like Papa, D like Delta, C like Charlie, .reconsideration, the word, at sba.gov. And you would just send them an email that you're requesting the balance of what was originally offered to you in the loan arrangement. You can definitely want to quote your original application number and your loan number, and also include your EIN. And just to be safe, I would also include my tax returns, as well as an IRS form 4506-T, currently signed. And by the way, when you use the 4506-T, make sure it's the March 2019 version. I'm thinking that was the question. If what Bernie addressed is the core of the question, then he's exactly right. It's unclear exactly who's going to qualify for the grant program, that if it reopens up for special demographics. I don't have the answer to that right now. But again, because of the enormity of the legislation, we expected a lot more information to come by middle of next week or so.
Right. Let me also mention that for everyone on the call, when this first act came into being back in April, the SBA had literally just a few days to put everything together, come out with some guidance, and it was a very demanding time. This time around, the SBA has had quite a bit more time, quite frankly. In spite of that, there's just an enormous amount of details that are associated with these programs here. So, they've come out with far more at the inception of this second act because they had a good couple of weeks, maybe a little bit more, in order to put things together. But more will be forthcoming regarding the details here. So all of us will have to continue to stand by in order to wait upon further guidance here as we go through the provisions of this new act.
Good. And I like this. This is very interactive with people asking questions, and that's what makes these things really special. I think I know the answer to this one, but I'll ask it. Are you eligible to apply for a PPP-2 loan, even if the first PPP loan was fully used for operations, but the first PPP loan may not be fully forgivable in the end?
Absolutely.
Yep, that's what I would say. The answer is yes. And I guess this would go to Robert. I'm being asked, how do I go about getting EIDL advance forgiven? Is there a link to an SBA form, or do I just have to go to my lender?
Thank you for the question. So the EIDL is directly with the SBA, and they will go back, the SBA will calculate it, and they're going to go back to the old application, so you don't have to do anything. I'm a Long Islander too. I don't like sitting around assuming anything. Clearly, I would give myself about 30 days before I go back and you can go to reconsideration. But there really is no forgiveness here with the EIDL. The advance is, the advance, if it truly was an advance, the SBA will address it on their own. It's not like the PPP forgiveness.
Okay. And we only have a few more minutes. Can contract labor, 1099 workers, be included in the calculation of payroll expenses in the second round of PPP?
So if you're a business owner and you're hiring contract workers, no, they have to apply on their own. They're paying themselves. They're not employees of yours. They're contract workers.
Okay.
And that's the same as how it was addressed in the first act.
Okay. Can you, I don't know if we could do this in 3 minutes. Can you review the documentation we should be pulling as a company applying for round 2? We would qualify for the grants less than 150,000. So I guess the question is, they have not applied in round 1, and what type of documentation they're going to need for round 2.
Well, it depends upon the complexity of their business and how much they're going to be applying for. So, that's, you take this on a case-by-case basis, and that's one of the reasons that you seek out assistance from an organization like the Small Business Development Center, or you go to your CPA. If it's very, very complicated, you may want to draw in perhaps, your attorney, if that may be of some assistance. So there's no pat answer here. It varies from case to case based upon the facts and circumstances of your company and the complexity of that.
Okay. I put in for reconsideration. It's been longer than 6 months. Will they still look at it?
Yes, there is. And if you haven't got any kind of response in 6 months, please contact me or one of the small business development centers. We can elevate some kind of request for giving us a status of what the situation is. But yeah, I would not let it go that long before, just to find out. And it might be a very good reason. And quite often the issue is there's a document that wasn't received. You thought you sent it in and it was correct, but let me tell you this. There are mistakes being made by applicants where one number is a little bit wrong, or some bit of data doesn't coincide, and that triggers a concern with the SBA. So definitely ask us or go through Anthony's team or Bernie's team, or just contact me directly. I will try to get a status for you on that.
Okay.
We do that from time to time. Our advisors, the contact number for our office in order to provide some assistance for that would be 631-632-9837. Sometimes following up on these things can be quite demanding, but we've done it in the past successfully so that you folks that are caught up in this kind of situation don't have to go through these frustrations for the first time.
And then the last question is, can I use internal P&L reports to show the reductions?
What I would use is, if you have your tax returns, that would be something that might be more acceptable. But if you haven't done your tax return for 2020, then use whatever you need to use in order to demonstrate the reduction in gross receipts. Keep in mind that The bank, when you apply for something greater than $150,000, is going to require documentation. So if what you have is your internal P&Ls, then obviously you bring those with you. For under $150,000, you don't need that, but you will need it for forgiveness. And again, if all you have is your internal P&Ls, then that's what you have, and that's what you'll use.
Tax returns clearly are ideal, but if you have bank statements to include deposits, withdrawals, any kind of documentation, in many cases, most cases of people on this call, you're just going to need to retain those records. It's not going to be required. But ask your lender. The lender has delegated authority, so they're the best source, like what they're really looking for. So that's your ideal situation. But to Bernie's point, a pro form is fine for you to keep things straight. At some point in time in the future, you may have to produce what it is that motivated you to apply for and document your loan. So you're going to need proof at some point in time.
Well, that's great. We're at the 1 o'clock hour. Great information. Like we discussed before, we could have the same webinar next week and the information will be a little bit different. So, but it's important to keep up currently on what we know so far. I have put my email address in the chat box. If anyone has a question they think of that we haven't answered or would like answered, just email me and I'll send it over to Bernie and Robert. So I want to thank all the attendees for joining the program today. And Bernie and Robert, as always, we appreciate your expertise and thank you once again, and more to come, as they say.
Thanks, Anthony.
Anthony, Rob, good to see you both. Enjoy the rest of the day.
All right.
Bernie, take care.
Okay.